Members of the media, PETRONAS executive leadership team, ladies and gentlemen, Assalamu alaikum wa rahmatullahi wa barakatuh, and a very good afternoon to everyone. Thank you for joining us today for PETRONAS half-year 2021 financial year results announcement. I wish to begin today's session by conveying my thanks to the employees of PETRONAS for their efforts and sacrifices to date. There is a need for us to recognize that the results I'm about to share with you were delivered under challenging circumstances thrust upon the PETRONAS group of companies by the pandemic. As at August 15th, PETRONAS reported more than 6,000 COVID-19 cases and 140 clusters within the group. Sadly, we also recorded 42 deaths to date involving our staff and contractors. Although our efforts towards vaccinating our staff continues, the impact of this damaging pandemic is still ever present in our day-to-day operations. Distinguished guests, the first half of the year has given PETRONAS a much welcome respite from the tough year we had in 2020. Rising optimism circled around improved oil prices and surging economic activities following the ease of lockdowns and rollout of global vaccinations. Dated Brent oil prices saw improvements, averaging $64.98 per barrel in the first half of 2021, compared to $39.73 in the corresponding period last year. This was supported by active market management by OPEC+ and the recovery in demand. However, this apparent recovery, if you will, in the oil and gas sector remains very fragile amid brewing uncertainties in the macro environment. To a large extent, the oil market and the price outlook is substantially dependent on OPEC+'s coordination and management to stabilize the market. There is still the risk of non-OPEC members flooding the market with inventory. Exploration spending remains subdued due to uncertainties as stakeholders demand lower cost and lower carbon resources. On August 12th, IEA had also released a global oil demand projection that shows a reduction in demand from 96.4 million barrels per day to 96.2 million barrels per day for 2021, a reduction of 200,000 barrels per day. The projection for 2022 was also revised downwards to 99.3 million barrels per day from 99.5 million barrels per day. These movements reflect a growing uncertainty on demand, following the drag posed mainly by the Delta variant, as well as lower prospects in the aviation and tourism industries. Conversely, LNG prices climbed to an 8-year high following an unusually hot summer that came on the heels of a very cold winter. Nevertheless, greater price volatility from extreme and unpredictable weather changes will likely continue. We are witnessing this already as spot prices are coming back to the low teens. Over and above this, our power generation demand has improved as we saw sporadic economic recovery. The nimbleness and agility of our LNG operations are not only reflected by the continuous efforts in optimizing the value of our global portfolio of LNG supply, but also in meeting the growing demand in the JKTC markets. Although refining and petroleum products have seen improving margins in the past 6 months after facing demand destruction from last year, uncertainty still remains. Even as I address you today, the aviation sector, as I mentioned before, has not rebounded, registering over 250 billion losses in revenue last year as a direct result of the pandemic. Since then, the transport segment needs have gradually increased in the US and Europe as they register uneven growth in demand for petroleum products. China recently declared that the country is facing issues in contending with the Delta variant, immediately denting demand in this segment. Olefin spread in the petrochemical sector is anticipated to weaken in the second half of 2021, pressured by an estimated 2.1 million barrels per day from additional capacities in China, Middle East, and the United States. I recognize that this is not entirely an upbeat set of data, but the message I'm conveying is twofold. Firstly, the sustainability of the current economic rebound is uncertain. And secondly, the pace of recovery across the many markets we serve remains uneven. While this uncertain operating landscape continues to unfold before us, oil and gas players are still contending with the increasing pace of the energy transition and a daunting decarbonization agenda. The recent Intergovernmental Panel on Climate Change, or IPCC, report indicated that global temperature rises are poised to reach or even exceed 1.5 degrees Celsius over the next 2 decades. Limiting this temperature increase means capping all future carbon emissions to 300 gigatons, a drastic change to the total emission levels of 2020, which was only set at 32 gigatons. This will demand nothing less than a significant pickup in pace of the action by the oil and gas industry, driven by stakeholder expectations centered on accountability of emissions and opportunities towards a lower carbon economy. Notwithstanding this, the observable recovery and stability in prices experienced in the first half of 2021 have indeed benefited the industry and has, to an extent, resuscitated the financial health of oil and gas players. In line with the other majors, I'm thus pleased to report that PETRONAS has delivered solid financial performance as we took advantage of the favourable current market conditions by responding with agility and pace in leveraging our integrated value chain. Wan Liza Mustafa, our Executive Vice President and Group Chief Financial Officer, will be elaborating on our financial and operational highlights in a very short while. Our performance for the first half of the year is indeed the result of the sheer dedication and service of the 48,000 employees of PETRONAS. Permit me once again to express my deepest appreciation at this juncture for all of their efforts and contribution. On behalf of the whole organization, I would also like to take this opportunity to thank Yang Bahagia Tan Sri Ahmad Nizam Saleh, our former chairman, for his immense contribution and leadership during his tenure. I would also like to extend a very warm welcome to Yang Bahagia Tan Sri Baki Saleh as PETRONAS' new chairman. I strongly believe his vast experience and insightful wisdom will be able to provide us the right steer, especially as we navigate through these challenging times. Ladies and gentlemen, PETRONAS remains resolute in delivering cost-effective solutions with a lower carbon footprint and remains resolute in executing our three-pronged growth strategy. We continue to maximize our cash generators by protecting our assets, whether they be located domestically or overseas. The efficiency and profitability of these assets provides a solid base and produces the required monetary resources to fund our growth. We will continue to expand our core business in related adjacent areas, but we will consciously do so in a cost-efficient manner. The ventures we embark on in this category of our long-term strategy will become our new cash generators. PETRONAS will also actively seek ways to enter new businesses beyond our oil and gas portfolio under our stepping out strategy. Here, new businesses such as solar, specialty chemicals, and hydrogen will present themselves as new sources of revenue, as well as avenues to lower our carbon footprint, aligned to our sustainability targets and net zero carbon emissions by 2050 aspiration. In doing so, we have also intensified our digitalization efforts towards enhancing capabilities and resources to future-proof the organization. PETRONAS is also actively pursuing partnerships that are able to further unlock opportunities and chart new frontiers in technology and innovation. We're increasingly determined to be customer-focused as we continue to create effective, value-driven solutions that address the energy needs of our customers. Distinguished guests, ladies and gentlemen, as we forge on with our pursuit of operational and commercial excellence, as well as charting our growth, we have never wavered from our commitment towards ensuring the well-being of society wherever we operate. Anchored on our statement of purpose, we recognize the importance of enriching the lives around us, especially in these very trying times. In Malaysia, we have set up PPV centres for oil and gas frontliners in Pengerang, Melaka, UTP, Kerteh, Kimanis, Bintulu, and Miri, with a total of 12,900 PETRONAS contractors and industry players who have been vaccinated as at 13th August. This is very much in line with our commitment to provide a safer environment within the oil and gas ecosystem and in support of the nation's aspiration to achieve herd immunity. Our efforts extend to wheelchair donations to 6 PPVs in Klang Valley through Yayasan PETRONAS and PETRONAS food banks at Mesra stations across Malaysia. I'm pleased to note that in fact some of these stations have been adopted by our staff where they pool their own resources to ensure a continuous and sustainable supply of essential items to the needy. Following last year's efforts, we carried on with our support towards COVID-19 relief initiatives either at home or abroad where we have our operations. And this total support amounted to almost 130 million ringgit. We also contributed 5 million ringgit to the National Food Basket Program, and we repeated our contributions to the NADMA funds through staff and corporate donations, totaling 2.3 million. PETRONAS international outfits have also contributed 5.7 million ringgit to various efforts that help combat the pandemic in their respective countries. Recognizing the impact of the pandemic to school-going children here in Malaysia who have no access or limited access to digital devices for their online learning, we also contributed 30 million ringgit worth of digital devices to the Cerdik program. Despite the cyclical and volatile state of the industry, PETRONAS continues to give back to society. We awarded over 300 scholarships amounting to 120 million ringgit and expanded our community well-being programs. We also sustained our environment conservation efforts, particularly in sustainable solutions under the new plastics economy championed by the PETRONAS Chemicals Group. All of these societal efforts are anchored on the amanah that PETRONAS holds in dispensing our obligation as a national oil company, our sacred duty to manage and maximize the nation's hydrocarbon resources for the benefit of all. Ladies and gentlemen, so far, 2021 has proven to be a relatively better year compared to the unprecedented period we experienced in 2020. As the saying goes, we must make hay while the sun shines. So we will continue with our ongoing operational and commercial excellence and focus on safe, reliable operations to optimize the margins while it lasts. I now invite Lisa to share PETRONAS half-year 2021 financial and operational performance with you. Don Lisa, the floor is yours. Thank you.
Thank you, Tengku Taufik. Ladies and gentlemen, Assalamualaikum warahmatullahi wabarakatuh and good afternoon. Overall, the first half of 2021 reflects an economic rebound to the industry, with all oil majors recording improved performance amid stronger commodity prices and growing demand. PETRONAS responded with agility and pace to the surging economic activities and leveraged on its integrated value chain to respond to the market. We delivered strong first half financial results, registering profit after tax of 18.9 billion ringgit, healthy cash flows from operations of 32.7 billion ringgit, and solid EBITDA of 46.1 billion ringgit. Notwithstanding, the economic recovery is seen as uncertain, with its sustainability being influenced by several key factors, such as OPEC Plus's coordination and management to stabilize the market, the emergence of new COVID variants that can weigh down the pace of demand recovery, as well as the speed of energy transition. As such, PETRONAS remains committed to work closely with its customers to better understand and respond to their needs, whilst at the same time exercise cost discipline in both its core business and growth pursuits. This is in line with our three-pronged growth strategy, which is maximize cash generators, expanding the core, and step out, along with increasing efforts to unlock opportunities on the cleaner energy front, thus paving the way towards a more sustainable future. We also continue to focus on ensuring financial flexibility and uphold capital discipline as we operate the core businesses and unlock new growth opportunities to maximize value for stakeholders. Ladies and gentlemen, let me now take you through PETRONAS's first half of 2021 financial results. The results are compared against corresponding period last year. The improved macroeconomics landscape during the first half of 2021 saw PETRONAS responding with agility to capitalize on favourable market conditions. Deliberate steps were deployed across the businesses to maximize value along the integrated value chain. Upstream business ramped up its gas production to meet surging domestic power demand, as well as to support higher production for the PETRONAS LNG complex in Bintulu. Effective coordinated efforts undertaken, together with the gas and new energy business, resulted in increased LNG cargoes loadable, thereby successfully capturing the rebound in LNG demand. Such efforts have immensely contributed to the solid financial performance of the group. The group recorded revenue of 109.6 billion ringgit, an increase of 17% from 93.6 billion ringgit in the corresponding period last year. This is largely attributed to the impact of higher prices realized for major products, such as petroleum products, crude oil and condensates, along with higher sales volume. The group registered profit after tax of 18.9 billion ringgit compared to loss after tax of 16.5 billion ringgit last year. This is mainly due to lower impairment provisions in the current year. Group costs stood at 94.2 billion ringgit, lower by 17.7 billion ringgit compared to last year, primarily due to lower net impairment losses negated by higher tax expense. Our continued efforts to preserve and strengthen liquidity have resulted in the delivery of a robust cash flow from operations of 32.7 billion ringgit, 24% higher than last year. This provides healthy liquidity cover for the group's capital investment. In line with higher profits, we registered strong EBITDA of 46.1 billion ringgit, an increase from 29.4 billion ringgit last year. Total assets of 609 billion ringgit as at 30th June 2021 increased by 6% since 31st December 2020, mainly due to higher cash and higher receivables. In addition, we continue to be in a net cash position of 59.6 billion ringgit, a position which differentiates us from our peers, a testimony to the group's prudent cash management practice. Ladies and gentlemen, the prolonged movement restricted order has adversely affected many of our domestic and international projects. This resulted in lower overall capex incurred at 12.7 billion ringgit in the first half of 2021 against 14.8 billion ringgit last year. Upstream continues to be the major component of total capex incurred at 42%, followed by gas and new energy at 25%, corporate and others at 21%, and downstream at 12%. With changing customer needs, acceleration of energy transition, and our increasing efforts to decarbonize, we continue to assess and reshape our portfolio, moving towards cleaner energy and lower carbon footprint investments to ensure a more robust and sustainable portfolio going forward. Accordingly, in addition to capital being allocated for our cash generators, increasing allocation is made for our investments in step-outs, which include specialty chemicals, renewable energy and storage, as well as hydrogen play. For the first half of 2021, over 200 million ringgit of total capex incurred was spent on renewable energy activities, whilst we continue to actively assess opportunities to grow in the cleaner energy space in line with our three-pronged growth strategy and our net zero carbon emissions by 2050 target. Ladies and gentlemen, the group's cash and fund investment balance as at 30th June 2021 stood at 167 billion ringgit, an increase of 18% from 141 billion ringgit as at 31st December 2020. This increase was largely contributed by robust cash flows from operations of 32.7 billion ringgit, which was able to support our capital investment of 12.7 billion ringgit and dividend to government of 8 billion ringgit during the period. With regards to the efficiency of cash generation, PETRONAS continues to lead its peers with CFFO margin at 30% for the period and retained its net cash position at 59.6 billion ringgit. Ladies and gentlemen, our strong financial performance in the first half of 2021 was backed by strong business performance across the value chain. A notable recovery in the profitability of our business segments were observed despite the prolonged pandemic effects. Upstream business registered 13 billion ringgit profit, a rebound from loss of close to 12 billion ringgit last year. This is primarily due to higher revenue and lower impairment losses on assets negated by higher tax, product costs, and cash payment in line with higher prices. Similarly, gas and new energy business registered 3.7 billion ringgit profit as compared to loss of 6.3 billion ringgit in the previous year, mainly attributed to lower impairment losses on assets, lower operating expenditure, and partially offset by lower revenue. Downstream business also registered profit of 2.5 billion ringgit in the first half of 2021, against loss of 1.4 billion ringgit last year, arising from improved petrochemicals and refining margins. Upstream business contributed the most to the overall improvement in profitability for the group. Ladies and gentlemen, in order to remain agile and responsive amidst uncertain times for the industry, upstream business continues to focus on delivering superior performance, being cost-effective, and pursuing efforts to lower carbon footprint through disciplined execution, commercial excellence, and digital adoption. The business responded at pace to the growing demands in the first half of the year, in line with surging economic activities and post-recession rebound. Total daily production average of 2.3 million barrels per day is almost at pre-pandemic levels and therefore higher compared to last year. This was mainly driven by higher gas production to meet increase in demand in both domestic and international operations. Upstream business correspondingly registered profit of 13 billion ringgit during the first half of 2021. The first half of the year also saw upstream concluding several notable key achievements. In maximizing cash generators, 6 projects successfully achieved first hydrocarbon, which includes 3 brownfields and 3 greenfields. A total of 3 projects achieved final investment decision, including 2 in Malaysia and 1 in Indonesia. In addition, upstream made 6 new exploration discoveries, with 4 discoveries offshore Sarawak and Sabah, 1 discovery offshore East Java in Indonesia, and 1 discovery offshore Brunei. PETRONAS and the National Unitization Secretariat of Brunei formalized the unitization agreement for the Gumusut Kakap and Geronggong Jagos East offshore fields in April 2021, following the earlier unitization frame agreement that was signed in 2017. This marks the collaboration by both countries to maximize hydrocarbon recovery from straddling fields. In April 2021, Progress Resources Gulf of Mexico, a subsidiary of PETRONAS, entered into a multi-well participation agreement with Chevron USA in the Gulf of Mexico. The transaction is in accordance with PETRONAS's continuous efforts to explore opportunities in the Americas as part of its global growth strategy, in line with expanding the core pillar of the 3-pronged growth strategy. To support PETRONAS's aspiration towards achieving net zero carbon emissions, or NZCE, by 2050, upstream business completed 2 major greenhouse gas emissions reduction projects located off the coast of Sarawak in June. The integrated Boko Betty project achieved zero continuous flaring and venting of hydrocarbon, while the project in Baronia achieved zero continuous venting of hydrocarbon since June 2021. Upstream business continues to intensify its digital and technologies deployment efforts towards enhancing capabilities and resources in order to remain competitive and resilient. The business achieved 175 million ringgit of value creation through wells cost compression initiatives, including design optimization, process simplification, and implementation of wells technology. Ladies and gentlemen, the gas and new energy business continues to strengthen its position as a one-stop center for cleaner energy solutions and accordingly benefited from the global market recovery through focused operational and commercial excellence efforts. The business adopted agile and adaptive measures to respond effectively to the rebound in LNG demand, specifically in the Northeast Asia, amidst surging economic activities and erratic weather patterns, whilst ensuring contractual obligations are met. In maximizing cash generators, gas and new energy business optimized its production and operations in response to customer needs by leveraging on PETRONAS's integrated gas value chain. This agility has allowed the business to capture market dynamics favorably and recorded 17 million metric tons of gross LNG sales volume on the back of strong operational equipment effectiveness at 98.1%. Accordingly, gas and new energy business successfully realized 3.7 billion ringgit profit in the first half of 2021. PETRONAS continues to be a reliable LNG supplier and has to date successfully delivered over 11,790 LNG cargoes from the PETRONAS LNG complex in Bintulu. This marks close to 4 decades of world-class asset performance since its operations began in 1983. In addition, PETRONAS has also secured 3.17 million tonnes per annum of new LNG deals. Capitalizing on the increased power demand, the business saw higher sales gas in the first half of 2021 as compared to last year. In addition, close to 620 million standard cubic feet per day of natural gas supply deals were secured from both new and existing customers. Meanwhile, with regards to expanding the core business strategy, PETRONAS' latest LNG solutions that provide reliable LNG supply to off-grid and marine industry customers continue to gain traction. A total of 180 virtual pipeline system deliveries were completed in Peninsular Malaysia, as well as 9 LNG bunkering deliveries fulfilled in the Straits of Malacca. This includes PETRONAS' first LNG bunkering operations in Port Klang. Gas and New Energy business also strengthened Malaysia's position as an LNG isotank hub following the commencement of PETRONAS' isotank facilities operations in Pengerang, in addition to its operations in Bintulu. PETRONAS also contracted 6 additional 174,000 meter cube LNG carriers through a time charter party agreement with Hyundai LNG Shipping. The vessels will be delivered starting from 2024 progressively. These energy-efficient LNG carriers will mainly be used to transport cargoes from PETRONAS' North America portfolio, which will further contribute towards the competitive and uninterrupted supply of LNG to PETRONAS' customers. On stepping out, PETRONAS New Energy has grown its solar capacity under operation and development to more than 1 gigawatt. This includes 118 megawatts in Malaysia and 976 megawatts in India through PETRONAS' wholly owned distributed energy company, M+ Energy Solutions. Ladies and gentlemen, downstream business delivered solid operational performance on the back of improved market condition, which saw rising prices for petroleum products, petrochemical products, crude and condensates, resulting in improved petrochemical and refining margins. Capitalizing on the favourable market condition, the business focused its efforts towards maximizing its cash generators while continuously striving for customer centricity by providing solutions that create positive and delightful customer experience. At the same time, downstream business also continues to explore new opportunities for growth to strengthen its resiliency and its sustainability. Downstream sustains solid overall equipment effectiveness at 93.1%, similar to same period last year. This was attributed to strong plant reliability and the dedication of our people on the ground, despite prolonged movement control order restrictions. Meanwhile, PETRONAS Chemicals Group Berhad, or PCG, continued its stable operational performance, recording plant utilization above 90%, producing 5.2 million metric tons of petrochemical products. Despite the implementation of statutory turnaround, the business remained stable and recorded overall sales volume of 4 million metric tons, which is comparable to last year. Overall, the petrochemical market saw higher product spreads in line with market recovery. The marketing business recorded improved sales volume, with total sales of 10.2 billion litres, contributed by international operations. PETRONAS Lubricants International Sdn Berhad, or PLI, recorded improved sales volume of 18% compared to last year due to higher demand for base oil. A similar trend was observed for Engine Limited, which also recorded 10% increase in sales volume compared to last year. Consequently, downstream business recorded profit of 2.5 billion ringgit during the first half of 2021. Another notable achievement by downstream business is the accomplishment of PETRONAS Marine for successfully conducting the first LNG bunkering operation via its LNG bunker vessel known as MV Avenir Advantage at the Pintu Gedong anchorage in Port Klang. The 7,500 cubic meter MV Avenir Advantage is a Type C tank capable of transferring LNG bunker fuel to all vessels equipped with membrane tanks. This service is the first of its kind in Southeast Asia and demonstrates the business commitment towards the bigger sustainability agenda in support of International Maritime Organization's goal of reducing GHG emissions, while also reinforcing the group's expanding the core business strategy. Amidst challenges brought about by movement restrictions across the country, PETRONAS Dagangan continues to innovatively diversify and grow its revenue streams by focusing on delivering value to its customers and stakeholders. In addition, PETRONAS Dagangan also recently established its food bank program at over 400 participation PETRONAS stations nationwide, allocating 600,000 ringgit to provide food and essential items for those in need. Beyond business, Social Enterprise Education Laboratory, also known as SEED Lab, officially announced its second cohort of social entrepreneurs with the passion to make a difference for a better Malaysia. This time around, Seed Lab is widening its focus into specific social challenges within 4 challenge areas, namely food and agriculture, health and hygiene, education and skills, and personal and financial security. A total of 50 aspiring social entrepreneurs were selected for the program, which will kick off in September this year. Ladies and gentlemen, that brings us to the end of the result announcement, and I thank you for your kind attention.
Thank you, Lisa. Ladies and gentlemen, I trust you would have observed that PETRONAS, together with our industry peers, have indeed benefited from favourable current market conditions. Despite the evident recovery, the group continues to adopt ongoing prudent financial management and a cautious outlook. PETRONAS remains focused on delivering cost-effective solutions with a lower carbon footprint, aligned to our 3-pronged growth strategy. The group remains steadfast in creating value, pursuing growth, and intensifying our sustainability efforts. The macro environment in the immediate future will continue to be shaped by a confluence of factors and events that emerged in 2020. Specifically, the world will continue to reel from the pandemic, with global COVID-19 cases now standing at 212.6 million, with 4.4 million deaths recorded as at 23rd August. We must all accept that the impact of this pandemic must not be seen as a short-term phenomenon. We must now prepare for a long, drawn-out process of recovery for the industry to achieve pre-pandemic levels. The uneven pace of vaccine rollouts amid the spread of new, deadlier variants will widen the economic divide and delay a full recovery. On the supply and demand side, imbalances will likely trigger inflationary pressure, while an upswing in equity and commodity prices will be closely tethered to the influence of OPEC Plus in stabilizing the market and the imminent energy transition, as well as the digital transformation agenda. Ladies and gentlemen, amidst this uncertainty, PETRONAS must ensure it remains on steady footing to weather possible market shocks. We must remain focused on maintaining fiscal discipline and careful operational spending, as well as preserving liquidity to ensure resiliency, growth, and sustainability of the business. All of the efforts so far have been undertaken so that PETRONAS becomes a cost-efficient producer. We continue to de-risk our business even as we deliver more cost-effective and innovative solutions to pivot our portfolio and strengthen our sustainability agenda. In parallel, we have little choice but to build a stronger, more customer-centric workforce that is committed to focused execution at pace. With the challenge of energy transition staring at us in the face, PETRONAS must build a resilient portfolio that is aligned to our 3-pronged growth strategy. This means attaining a superior performing and high-value portfolio that is robust, that is sustainable in the long run, while positively contributing to society. We have seen progress towards achieving this. We continue to expand our renewable energy business in solar while actively pursuing plans to diversify into innovative solutions such as energy storage, hybrid solutions, and advanced analytics in energy monitoring technologies. These are all part of the efforts to future-proof PETRONAS in the energy transition. We're also building a portfolio of low-carbon energy sources by creating greater access to gas and LNG as the low-carbon option within the energy mix. PETRONAS is also making early headways into hydrogen by leveraging on our proximity to key hydrogen demand centers. Our venture into hydrogen will be built upon partnerships, leveraging on our existing capabilities in extracting blue hydrogen from our facilities, as well as our considerable track record as a reliable LNG supplier. On this front, concerted efforts have been initiated to determine how to scale up green hydrogen production and solve the technological challenge of safely and economically transporting hydrogen. In securing new markets with novel solutions, we introduced Yellow, a last-mile logistic provider in the B2B segment, as a unique offering through the electric vehicle or EV space in India. It is important for us to read the technology convergence and ensure that PETRONAS is equipped to partner or invest in the infrastructure in a very agile fashion when we need to generate returns. PETRONAS LNG Limited, or PLL, a subsidiary of PETRONAS, on the other hand, recently secured a 10-year term deal to supply liquefied natural gas, or LNG, to CNOOC Gas and Power Trading and Marketing Limited, a subsidiary of China National Offshore Oil Corporation, CNOOC. This long-term supply agreement also includes supply from LNG Canada when the facility commences its operations by the middle of the decade. The term deal between PETRONAS and CNOOC is valued at approximately $7 billion over 10 years. Aligned to our lower carbon commitment, PETRONAS recently completed the delivery of its maiden carbon-neutral liquefied natural gas or LNG cargo to Shikoku Electric. Under this agreement, PETRONAS offset the estimated life cycle carbon footprint of the LNG cargo through renewables-based carbon credits for the emissions generated all the way from upstream gas exploration and production through to transportation, liquefaction, and shipping of the LNG cargo. The delivery was completed on a significant date for PETRONAS as we celebrated our 47th anniversary. PETRONAS will strive to regularly register similar progressive milestones in the near future. Distinguished guests, ladies and gentlemen, I've made you aware of the COVID-19 relief efforts and other contributions already mentioned in the earlier segment. Most of you are also aware that the PETRONAS board had previously approved a dividend payment of 18 billion ringgit for this year to the government of Malaysia. Recently, having carefully considered a request from our shareholder and rigorously assessing the affordability of further payments, the board approved an additional 7 billion ringgit dividend, bringing the total dividend contribution for 2021 to 25 billion ringgit. We will also continue to explore non-traditional partnerships within and outside the industry to strengthen our core business while we pursue our growth agenda, especially in new step-out areas that we are already pursuing. The PETRONAS Tech Challenge and the PETRONAS Future Tech 2.0, which were recently launched, calls for innovative solutions in solving operational industry pain points and scaling up homegrown startups, respectively. As we navigate this very challenging period, our short-term to long-term initiatives to elevate and future-proof the OGSE sector will need to continue in order to both maintain the stability and improve the resiliency of the ecosystem at large. These initiatives range from financial aid in collaboration with banks, all the way to upskilling capabilities as we welcome them to forge ahead together with us in this journey. Distinguished guests, in closing, let me state that PETRONAS is indeed encouraged by the favourable current market conditions and observable immediate recovery. However, PETRONAS will remain cautious and it will adopt a very prudent outlook in navigating the rest of this year as well as 2022. The board and management of PETRONAS remain determined to continue enforcing financial discipline whilst actively reshaping our portfolio in contending with the daunting energy transition that we all now face. PETRONAS must come out of this very trying period a more resilient, a more agile, a technologically stronger and financially robust company. Before I end, let me take this opportunity to once again thank our employees, our partners and stakeholders for their tireless contributions and continuing support during these challenging times.